The Capitol. He joins us on the Fast Line tonight, Peter, for a man who's been touting the merits of gold. That certainly seems to be working. But in terms of the developments just moments ago that the Senate Banking Committee is going to probe S&P based on this downgrade and that, quote unquote, all options are on the table, this according to Reuters, does that make gold an even more attractive play, perhaps?
Well, I mean, gold's going to go up no matter what, but sure. I mean, I've always thought that maybe there was some kind of quid pro quo going on. You know, why wasn't Congress prosecuting anybody at S&P or Moody's for the fraud involved in subprime? I thought it was because they weren't downgrading the U.S. Treasury. And now that S&P did it, maybe there's going to be retaliation. But, you know, everybody is jumping all over S&P. The only thing they did wrong is they waited too long to downgrade, and they didn't downgrade low enough. And you got guys like Warren Buffett and Alan Greenspan saying that the U.S. shouldn't be downgraded because we won't default. We have a printing press. That's the point. When you rate sovereign credit, you rate the value of the money that the government is repaying. And if we're going to use the printing press, that means the dollar is going to lose value. I mean, based on Warren Buffett's analogy, Zimbabwe should be AAA. They got a printing press.
One of the things S&P pointed out is the political process. They basically went right after it and said, you know, part of this is the confusion and the lack of a coherent policy coming out of Washington. I think we all agree with that. But to say that, look at the endorsement for the U.S. Treasury market today. The fact that you cannot hold the U.S. Treasury market to the same liquidity standards as you can to...
That was not an endorsement. What happened was the Bank of Japan bought a boatload, $50 billion on Thursday. They had to put into treasuries. The Bank of China was in there buying treasuries. People are buying treasuries to prevent the market from collapsing.
No, they're not. No, they're not. Peter, they have no other options. And talk about, you know, look, you're always talking about the implosion of the Treasury market. Today, to me, should be reinforcement. We have very significant issues in this economy, but look around the world. Look at the markets you've been endorsing. They are falling even faster than the U.S. market.
Gold was up $50 today. The dollar was barely up. Look at it 2008. The Swiss franc hit a record high today. 20%. People are not going to the dollar anymore. They're going to gold. They're going to the Swiss franc. They're doing that for a reason. And yes, why was the Bank of Japan intervening? To try to stop the dollar from falling. That shows that there's no real support in there.
What I'm trying to point out is this is a policy failure around the world. This is not a U.S. problem, Peter.
Peter, let me ask you one question based on last week's trading action, specifically in gold. Last week, we saw a day where the markets were down, and the first move was to raise cash. They sold out of gold. Does that make you even a little bit concerned that when things are really, really bad, people will want cash and not even gold?
No, because gold on that Friday, when everything was getting clobbered, the Dow was down, 5%. Gold was down 0.5%. That was it. And it closed that Friday at a record high. This is one of the strongest bull markets. The fact that people would look at a 0.5% down day and think, oh, gee, look, people are liquidating gold. People bought gold, and they're going to keep buying gold. Central banks are buying gold. They know the U.S. dollar is junk. They know it's not AAA. And all you have to do is wake up and look at what's actually going on. Now, yes, were there a lot of foreign markets that got beat up today because a lot of traders don't know what to do? Sure, there are a lot of leveraged players that are surprised that the U.S. economy is going back into recession. In fact, we're probably already in a recession, and it's going to get a lot worse, and people don't know that, so they have to rearrange their portfolios. But within there is a lot of opportunities. You can buy the drop in some of these commodity stocks. Certainly, I've been pounding the table on gold stocks. I don't know any companies whose fundamentals are improving faster than gold stocks right now. The cost of mining is going down, and the price of gold is skyrocketing.
We got to leave it there, Peter. I know you're all excited on daylight today, but we don't have limited time. Thanks so much for your analysis today. Peter Shiff of Euro Pacific Capital.
We have Bob Pisani, Rick Santelli's with us. Euro Pacific Capital's Peter Shiff is also with us today, as is Core States Capital Advisors Bill Spiropoulos. Welcome all around. Bob Pisani, the energy level's high here at the big board today.
You know, we can't even have a nice, boring, quiet close into a three-day weekend. We're standing here all of a sudden a little after 2 o'clock. Word comes out, this Dow Jones wire, that Bankia was getting a lot more money than people anticipated, $24 billion. Bottom line is markets drop. We lost several dozen points on that. So this is the problem, guys. We're just hostages to headlines all of the time. And anytime you think we're stabilizing, and it's been a pretty good week, the S&P's up 1.5% or so, you get little headlines and it drops you a little bit more, a little stabilization.
And Peter Shiff, this is exactly what the markets have been focusing on for a while now. It's all about Europe right now, isn't it?